Hello, my name is Allan Mendoza and I will be presenting on behalf of AC Consulting Group. This presentation is a strategic audit of AstraZeneca plc and aims to propose a solution to mitigating the negative impact on company profits after the patent expiration of its pharmaceutical drug Nexium. We would like to propose that AstraZeneca take a new sales and marketing approach for Nexium that it hadn't previously done with Prilosec. The proposal calls for AstraZeneca to enter a 10-year licensing agreement with two companies in the generic drug industry for its Nexium and Purple Pill trademarks. The benefits include the following. AstraZeneca will continue to accrue royalties in the wake of the patent expiration. It will provide additional marketing for Nexium. It will provide a dynamic source of income, and an improved long-term revenue for Nexium. AstraZeneca has been a dominant force in the pharmaceutical industry since its introduction of Prilosec back in 1988. However, the patent will expire soon and will be copied and manufactured by generic drug companies, undercutting profits. Therefore, AstraZeneca must integrate a new business strategy to avoid the shark fin curve, which is characterized by the sharp decline in profits after patent expiration. After careful analysis of the company, we have determined three strategic alternatives. The first, retrenchment, would call for downsizing and cutback initiatives for the company. Essentially, the company would need to be downsizing its employee count and reducing marketing and R&D costs. The pros of this are that it eliminates unnecessary expenses and the company is able to focus more important units to optimize for rebuilding. The second alternative is licensing agreements, which calls for AstraZeneca to license its Nexium and Purple Pill trademarks to generic drug companies. The pros of this include extracting value from Nexium now and even in the future once the patent has expired, and also transferring market costs and reducing overall cost of production for AstraZeneca. The cons of this program include losing control of the product and the fact that royalties may take a long time to be realized. The final strategy would involve AstraZeneca forming a joint venture with one or two more companies. The pros of this would involve that partners are able to share financial responsibility, and it enables partners to utilize each other's resources. The cons are that it will involve a conflict of interest at times, and in addition, actions and procedures will take longer to be implemented since they need to go through each company and each person involved. After considering each alternative, we've concluded that a licensing agreement would be the best and most cost-effective option for AstraZeneca. It would simultaneously add value and mitigate financial risks. In addition, it would provide AstraZeneca with royalties from the licenses, and it would increase market exposure, transfer marketing costs to the licensees, and decrease a rate of profit decline after the patent expires. For our plan to be implemented, AstraZeneca would need to begin by researching drug companies that would be interested in a licensing agreement with the company. The second step would be to contact these two companies and conduct a meeting regarding the potential agreements, which would take about 6 months. Next, the negotiations being finished, a licensing agreement will be finalized and signed by both parties, and the generic drug companies will be able to start selling products under the trademarks Nexium and the Purple Pill. Next, AstraZeneca will need to file an affidavit 5 years after the trademark registered to prove that it is still interested in maintaining the trademark. Finally, once it has expired after 10 years, the company will decide to renew it or not. This diagram is a visual representation of our timeline for the implementation process. The first step in July of 2001 is that the two generic drug companies are contacted for a meeting. The second step is that all negotiations become completed in December 2001. Then in January 2002, the generic drug companies will be able to start selling the product Nexium. Next, in January of 2007, the affidavit will be filed and paid for. And finally, in January of 2012, AstraZeneca will decide whether or not to renew their trademark and pay the fee for that trademark, in addition to paying a fee for their patent. This diagram is a table of the budget for our proposal. The activities include trademarks, patents, and legal fees. The cost of the trademarks come out to $850, and the patent cost comes out to $7,570. Legal fees, which will include an annual fee for 5 lawyers at $70,000 each, comes out to $350,000. Our plan for evaluation and control of our proposal are as follows. It would reduce the rate of profit decline to 20% in the first year of implementation. Additionally, the results can be measured each quarter in each fiscal year. Next, AstraZeneca would compare the financial results prior to the licensing agreements with the financial results after the licensing agreements and determine how profits are improving or being affected in general. Moreover, AstraZeneca would have to periodically police trademarks, such as routinely monitoring competitors and general industry searches. Finally, another form of behavior controls is that AstraZeneca would instruct licensees to document business practices using the ISO 9000 standard series. Furthermore, it would require the generic companies to send periodic sales reports, and it would continuously check on the public image of these companies to make sure that they are representing the brand well. This concludes the presentation of our proposal. I would like to thank you for your time, and we look forward to doing business with you.